All right, hello everyone. Good afternoon, and welcome to tonight's free market update for the futures markets. This is Neil doing the videos again tonight, and I have really pretty much more of the same. Nothing really terribly much new tonight. Well, and not much has changed. Let's look at it though. Talk about this because this is um, one. This has not been easy. This has really not been easy. This has just been a steady, slow grind from lower left to upper right that is just higher, 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 but it's not that easy. Okay, so what I mean by that is that even though when you look at this in hindsight, you see, okay, well, you got higher lows all the way up. Yes, that's great for those swing traders that, bought the retracement into the averages here, which actually we did talk about at the time. But yet then we start the progression higher, higher lows, higher highs all the way up. But these highs are actually coming in pretty consistently overnight. And so you come in the morning and you're interested in buying this, and let me tell you, there's nothing easy about buying this, especially as you wake up for the morning session at 8:30 in the morning Chicago time or 9:30 Eastern New York time. In fact, today, for instance, let me give you a for instance. Today, the overnight high came in just like it did last night, just like it did the night before that, just like it did the time before that. The highs come in again, new all-time high. It comes in overnight. So let's say you come in this morning at 9:30 Eastern, 8:30 Chicago, and you're interested in being a buyer because you're not already in this. Well, guess what? You bought a high, and you had to wait for 4 hours, and you took heat for 4 hours until 12:30 in the afternoon Chicago time, 1:30 New York time before this thing found a low near the Globex high of 2 nights ago at the new all-time high at that time, which was about 52, 53 in the S&P futures product. By the way, I'm talking futures. Okay, if you're looking at SPX, you need to know that that quote is going to be approximately 6 points higher than all these quotes I give you here on this futures product. But when I say 52, 53, I mean 21.53 in the S&P futures contracts, and that is the September quote, September futures contract. Anyway, what I'm getting at is this. If you're flat coming in the morning and you're a day trader, this is not easy. You're looking for buying opportunities because the thing's been trading lower left to upper right, either that or you can't believe the highs and you're trying to find a place to sell it. None of this has been easy because at the end of the day they're making, they're going out near the highs, but yet try buying it at 8:30 in the morning and see how you feel as you sit through 4 hours of pain until finally midday they find a pivot low and start to trade higher. So here we go out again today. Same story as yesterday largely. That is, historically we trade higher into the expiration. I gave you that last night. We're nearing, now we did make the one full standard deviation above the current mean average, which is back here at say 2120, 2121, whatever, 2120-ish, which is what, 40 handles lower. And so, what do we do with this here? Well, it, the song remains the same thing as last night. What do you do with this here? You're patiently looking for buy the dip opportunities into the expiration tomorrow with the ever increasingly cautiously optimistic thinking frame of mind and or mode, etc., whatever, wherein we're continuing to make higher highs, higher highs, higher highs. At some point, this is an auction. I've said it before. I will say it again. This is an auction. Markets auction higher in search of sellers. Prices will finally reach a point at which they are higher enough that sellers will respond by taking profit. Some even initiate new, but some, moreover, what we're looking for in this environment is just simply profit taking. That profit taking will yield this market back into a mean average. Markets rotate back to the averages. That's what they do. They do that or they pause and averages catch up. More times than not, they rotate back into the averages. At which point we will look to be a buy the dips opportunity seeker yet again, and we will buy that dip in search of another new high until something happens which has us change our frame of mind. But if you reach up here today or yesterday or the day before, the day before, the day before that, and you try to pick a high, then you're just getting run over continually. So good luck with that. Go ahead and pick another high up here and try that out, on for size. And I mean, if the past is any indication, it'll end, or the net result will be the same as it was the last few sessions, and that will not be a good thing. What I'm getting at is we need a signal. We need something up here that tells us, okay, it's okay to try to, now be a very, very small, cautious seller back into support. I may not even do that, to be honest with you. I may just wait it out and be a buyer of the dip opportunity on said retracement, which will come. When, I don't know, but certainly I believe will come. Historically, we would look for that to start after this event, which unfolds tomorrow, which is an expiration. Okay, so I think we're getting close, but I'll be honest with you, I thought we were getting close when we traded about 21.30.35, which was a test of last year's unadjusted all-time high at that time, which was about 21.34. So, if we just blindly faded that level, we'd be some 30 handles underwater and not happy, at all. With that, let me say this: not easy trade, unless you're a swing trader and you're just holding longs. And this is not the only not so easy trade to figure out there right now. There's a lot. There's choppy trade in some of the currencies like the euro and the dollar. There's very choppy trade in some of the ag products right now. The beans are up, then they're down. It's and gold. Same thing in gold. It's down. It's up $20 one day and down 20 the next. So it's an interesting environment out there right now, to say the least. What we can do with this right now is you have to maintain a bullish outlook and/or perspective. Increasingly, though, cautiously optimistic in that we are nearing an event that can have us start to just simply counter rotate back into some support area, wherein we will then be a buyer of that again dip opportunity. Okay, so truly hope this helps. You guys have a good trade, nice evening, and we'll do this all again next week. Just remember the expiration. And well, one more thing too before I let you go. In the expiration cycle, typically, everybody gets pressed, and that means that there's rotation up to press anybody that was, and this is the rotation up, really. Press anybody that's tried to fade this, and I'm seeing people do it, fading the call side of SPX, condors, for instance, iron condors. The put side's obviously in good shape, but the call side's getting really pressed. So what does that mean? If everybody gets pressed, well, then you get a rotation down during the the expiration kind of sequence, wherein then your put side gets pressed a little bit. So typically you get a move both ways on the expiration. That is a little higher, a little lower to press everybody and then settle kind of in the middle, or a happy medium, like it's all forgiven in love, war, and trading, evidently. But with that, I'll let you be, and be with you again next week as we do it all again.